Hello everyone, PS from PS Invest Plays here today. In 2021, Upstart stock has been on a roller coaster ride, mostly up, rising nearly 670% before Q3 earnings. After Q3 earnings, it has shed more than 38%. Has the stock peaked, or can we expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott Wave to see how we can make money. So, stick around. I think you'll like what I have in store for you today. Upstart, ticker UPST. Upstart is fintech company that's disrupting the consumer lending industry. Traditionally, banks have used credit models that incorporate at most 30 variables to determine who qualifies for financing and at what interest rate. However, Upstart believes those models deny many creditworthy borrowers and that many people who are approved are charged too much. Case in point, 80% of Americans have never defaulted on a loan, but just 48% have access to prime credit. To that end, Upstart leans on artificial intelligence to make consumer financing more inclusive and efficient. Its platform collects over 1,600 data points per applicant and measures those variables against 10.5 million repayment events. That allows Upstart to quantify risk more precisely than alternative methods. In fact, the company believes its AI models are 4 to 8 times more effective than traditional credit models. Who does that benefit? Everybody. Consumers benefit from greater approval rates and lower interest rates, while Upstart's bank partners benefit from greater approval rates, more business, and lower loss rates. And the network effect created by Upstart's AI models should reinforce those benefits over time. In other words, as its platform is used to originate more loans, Upstart will collect more data, making its predictive engine more intelligent. It seems to be working. Upstart is growing at a phenomenal pace. During the second quarter, bank partners originated $2.8 billion in loans using its technology, up 1,605% from the prior year. That caused revenue to skyrocket 1,018% to $194 million. And the company posted a profit according to generally accepted accounting principles, or GAAP, of $37 million. Upstart's Q3 quarter was simply wonderful. Loans originated from Upstart's decisions reached almost 363,000, totaling $3.13 billion, and grew 348% year over year. Upstart beat both revenue and earnings estimates, growing sales by 250% to $228 million and roughly tripling net income to $29.1 million. The conversion on rate requests, how often Upstart's bank partners ended up giving out a loan after Upstart made a decision, increased from 15% 1 year ago to 23% today. The company's fourth quarter guidance was also strong. Upstart is expecting Q4 revenue of $260 million, representing growth of 14% sequentially and 199% from the same period last year. Its Q4 net income guidance is $18 million, but its adjusted net income, which takes out stock-based compensation, guidance is $52 million. The company also raised its full-year guidance from $750 million to $803 million in revenue. Upstart launched its auto lending service, formerly Prodigy, which it acquired in early 2021 on October 6th, and it has already powered 4,000 auto loans in 47 states. The auto lending market is 6 times the size of the personal loan market. So this part of Upstart's business is expected to grow astronomically over the next 5 years. The downside to this, however, is that in the short term, contribution margins, Upstart's version of gross margin, will decrease. With the scale up of auto, the Q3 contribution margin decreased from 54% to 46%. And because of continued growth in auto volumes, this is expected to continue. With that said, the auto lending space offers market opportunity of $719 billion. But the company plans to pursue other markets in the future, including credit cards, student loans, and mortgages. That would boost its total addressable market, or TAM, to $4.2 trillion. To put that in perspective, Upstart facilitated just $4.5 billion in loans through the first half of 2021, or $9 billion on an annualized basis, which represents 1.2% of its current TAM and 0.2% of its potential TAM. That's why I think this $26 billion fintech stock can grow considerably over the next 10 years. After Q3 earnings, the stock has been in constant selling pressure. The valuation of Upstart going into earnings was a staggering 60 times sales. At that kind of valuation, Wall Street isn't satisfied with a strong beat and raise quarter. With valuations this high and such a strong run-up before earnings, there might not have been any result that would have caused the stock to go up. While nothing went wrong in this quarter, it is sensible that the market may have needed to take a breather. Just because the quarter went well doesn't mean there aren't plenty of risks associated with Upstart. First, Upstart has yet to go through a financial downturn, which is often a key milestone for financial companies, especially ones that are lending. Right now, it is easy to lend, and it is easier for people to pay back their loans. However, when the economy falls, it will be a true test to see how good Upstart's algorithms are. As long as Upstart's revenue continues to rise and the company gains more partners, investors should be comfortable knowing that its algorithms are correct. After all, if its algorithms are poor, customers will end their relationships with Upstart. Second, the company has major customer concentration. At the end of 2020, one customer accounted for 67% of all loan volume. This has been steadily decreasing since, and in the third quarter, that partner only represented 58% volume. This is likely due to the fact that Upstart has been rapidly increasing its customer count. Upstart has 31 lending partners in Q3, compared to 10 the year before. With this kind of growth in partners resulting in greater revenue diversification, its biggest customer will likely make up less of Upstart's total volume. Looking at the financials for Upstart, revenue, net income, EPS or earnings per share are excellent. EPS has been increasing quarter over quarter, and in most of the quarters it has beaten the analyst expectations. For risk-tolerant investors who can deal with volatility and have not yet added Upstart to their portfolio, because of its fast run-up this year, the market is giving you an opportunity. Despite an astounding quarter, the stock is dropping like a rock. In this case, the market's decision is quite irrational, and investors who have wanted to add Upstart to their portfolio should consider this an excellent time to buy a high-quality company at a discount. While the stock has already skyrocketed this year, there is still room for investors to make money over the next 5 years. Upstart is trying to disrupt $750 billion in loan volume, and considering it just had $3 billion in this quarter, the company has plenty of room or growth left. I believe that Upstart is one of the smartest places to invest money today, especially at this discount. This is also indicative in the charts, where I see the stock price to increase considerably in the next 4 to 5 years. Now, let's take a look at the chart of Upstart. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's get back to our analysis. Looking at the chart for Upstart, the bull run that started in early 2021 is still not over. It has completed its first 2 waves, and wave 3 is in progress. If we look deeper in wave 3, it has completed its first 3 waves, and wave 4 seems to be completing. I see strong resistance around $215.68 and strong support around $197.03. This to me is accumulate range for Upstart. After this correction is completed, I expect wave 5 or the intermediate wave 5 within the larger primary wave 3 to resume, which is wave 5 is typically 161.8% retracement of wave 4 in this case, giving us a short-term price target of $502.63. This should also mark the end of primary wave 3. After this primary wave 3 is completed, I expect wave 4 to resume, and wave 4 is typically 38.2% retracement of wave 3, bringing the price down to $363.53. After this retracement is completed, I expect the final leg up or primary wave 5 to resume, which is typically 61.8% of waves 1 to 3, giving us a final price target of $693.05 in the next 4 to 5 years, which means a profit of 242% in the next 4 to 5 years. Now let's summarize. As I said earlier, the current stock price is an excellent buy range. Nibble any further pullbacks or corrections. For me, the accumulate range is between $215.68 and $197.03. I would recommend holding it for the next 4 to 5 years, as I expect a price target of $693.05, which translates into 242% profit in the next 4 to 5 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so that you're notified when I upload a new video. Until then, bye-bye.